Kevin O'Leary joining me now. Right, 50,000 on the Dow by the end of Trump's term. Almost double, actually more than double from where we are now. What do you say to 50,000 by the end of 4 years, Kevin?
I think that's a long time to speculate what the outcome's going to be. I think you've got to take it quarter by quarter. Let's just deal with hysteria right now about the market declines. Let's assume we close down another 1,000 points today. I kind of, I understand why there's a lot of teeth gnashing, and I get it. But I'm a kind of a long-term guy when I look to PE ratios. So we took the market down from sort of 22 PE to now around 17.5 as of this hour, which historically is not a bad place to enter if you want to think about long-term sustaining returns. So I'm looking at it, and I've started to nibble. I'm not going to catch the bottom, but 17 PE sounds pretty good to me on the S&P 500. And I look at the pillar, you got to look at the E too. Everybody's saying it's the end of the free world as we know it. I don't really view it that way. I make an assumption that we're in a pretty strong economy right now. Those job numbers on Friday were very, very good. I have not seen a decline in orders from my own tear sheets and private companies I'm invested in. They are not yet ready to call recession. And now we go to the question of, okay, what happens regarding all these tariffs? And I would like to see, as many others would, one of these 60 countries or 50 countries that are calling in to cut a deal. You got two pieces to this negotiation. One is remove all tariffs. I'm 100% for that. Like, I don't care. Pick your Vietnam, Israel, India, Euro, Canadians, whatever you want. Everybody's willing to cut a deal to zero tariff both ways as part of a package. It's the trade deficit punitive aspect here. Taiwan's a good example. There's a $200 billion trade deficit because we buy stuff from them that we don't make. I have a greeting card company there with a lot of Hewlett-Packard laser cutters, and we put it in Vietnam because we don't want to put it in China. And Americans are going to pay a lot more for their greeting cards. Love Pop greeting cards are made in Vietnam, and they're shipped every day from there, and it's all American equipment invested there. Our money, American money invested there. So we're going to have to work that out, and the government there wants to work it out. A lot of moving parts here, Stuart, but I believe in economics driving everything at the end of the day. And I don't think the Trump administration is stupid. They know they've got to start negotiating deals and show the world what the outcome of this is going to be.
Are you ready for some intriguing news that's shaking up the stock market? Today, we dive into the latest buzz surrounding Nvidia Corp, a major player in the chip industry. Analysts like Stacy Rasgon have uncovered a potential silver lining amidst the market turmoil. Welcome back, everyone, to Investocracy.
Okay, then we've got America's top banker, Jamie Dimon. He says Trump's tariffs will lead to a rise in inflation and slow the economy. That would not be good for stocks if he's right.
Yes, if these tariffs stay in place in perpetuity at 25% rate, he would be right. But I think this is a giant negotiation. And, Trump is not shy of being bombastic. We've learned that over 12 years. And you may find the rhetoric painful, but that's not the key. The key is the signal. And if all of a sudden all these countries want to go to zero tariffs, and then we have to work out case by case what commodities we want to let into the country. We need aluminum right now, so we need the Canadians' power to make it. So that's crazy to tariff ourselves on aluminums if you're in the U.S., And I'll tell you one that I find so intriguing that you would understand, Stuart. I was in Geneva last week for the global trade show for manual watchmaking. It's a $5 billion business between Switzerland and the U.S. While I was there with all the CEOs, all the watch companies, because I'm trying to buy watches, you know that, and I want piece uniques, so I'm dealing with these guys directly, we get whacked with a 34% tariff directly. Now, here's the dilemma. If you're a watchmaker, pick Rolex, pick Patek, AP, the demand for your watches worldwide far exceeds your ability to manufacture them. Some of these companies only make 4,000 watches a year. So you're going to delay shipping them to the U.S. while we work this out because China will buy them all from you, or Asia, or Singapore. And that's their dilemma. And I say to them, listen, guys, you want to keep on side with American consumers with your brands. I'm one of them. And just let things play out a little bit here. Give us a few weeks to work this out. There's a case study right there. Don't take my watches away from me. That would be crazy. And I speak on behalf of millions of collectors.
Okay, I hear you. It's a giant negotiation which is not going to be concluded anytime in the immediate future.
Stacy Rasgon's analysis sheds light on Nvidia's compliance with export regulations, hinting at a bright spot amid the tariff concerns. It seems that Nvidia's AI server shipments from Mexico might be exempt from the new Trump tariffs, as per the USMCA agreement. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Today where the averages opened down horribly, right? The 9th straight lower opening, only to rebound. And the Dow finished down 349 points. S&P slipped 0.23%, but the Nasdaq actually eked out a gain of 0.10%. Now, this morning, wouldn't it have felt great just to sell everything, to liberate yourself from your losses, to pick up the pieces and go home? And you would have been dead wrong. Dead wrong. Which is why I counseled not to do it. Yet this morning, when faced with a hideous opening, with most indices down almost 5%, it sure looked like we were going to have another Black Monday in our hands, didn't it? That's one where stocks closed down more than 20%. Now, if you thought we were headed for Black Monday, then you would have happily sold down 4% near the open. But I didn't make that call. Why not? Well, let me walk you through it. Full disclosure, there's no certainty we won't face the same situation again, but you and I will do it together. I'm certainly not calling a bottom here, not with this trade team's ill-advised strategies. I mean, I don't even know if they know what they're doing. The endless down openings also can't last. I am saying that it might be too late to sell, though. And you have to start thinking about what you might be worth buying on the next dip, as there will be one. I think there's plenty of bargains after the sell-off, especially with the oscillator at minus 8.7. Buy, buy, buy! So why didn't we panic this morning? Why did I say stay the course? First, I assessed what kind of sell-off this is. Do we have a problem that's systemic? Meaning there's actual weakness in a rot in our institutions that can't easily be undone. Now, my partner David Faber and I discussed this very point this morning. We agreed that we needed to take the financial crisis scenario off the table because our institutions are strong. And look, we don't believe that the whole economic system is in jeopardy. We don't believe that major banks will fail. We definitely don't like the situation, for heaven's sake, and it's likely we're headed for recession because of the president's ill-advised plans. But we'll pull out of it one way or another. It's not going to be the global financial crisis number 2. And that's important. Because if you look at the 15% downturns we've experienced in the last 4 years, the vast majority of times you had to buy, not sell. Normally, when we're down 15%, we actually have seen the worst of it, or the market becomes viable again, unless it's systemic problems like the financial crisis. You have to assume that, yes, indeed, the worst may indeed be behind us.
Adding a touch of humor to this serious topic, analyst Jordan Klein humorously pointed out the surprising lack of cutbacks expected in NVDA's investment spending. Despite the AI trade slowdown, investors see a promising year ahead for Nvidia. Klein's observation on the sentiment and ongoing investment spending reflects a positive outlook for the company. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Right now, we're clearly looking at a one-off event. The president's decision to enact shockingly high, perhaps, let's just say, even dangerous high tariffs. As long as the tariffs stick, our economy is in real trouble. But it looks like the president doesn't care. He should always care, both short and long term. That's part of his job. That said, the stock market almost always bottoms before the economic indicators like employment, industrial production, GDP growth. Before they start rebounding, the market bottoms. I want to thank Michael Semblis, the unbelievably good strategist, J.P. Morgan, who actually pointed that out in a remarkable talk that was also had some humor to it that he gave today. He noted that the administration lacked rationality in the way it went about this very suboptimal plan. And while it hurt the economy, it's not the beginning of a nuclear spring. Thank heavens. Third, when you just look at things purely historically, you can figure out where we might eventually bottom if things go south from here. At one point, for instance, some companies in the S&P 500 could collectively earn $300 per share. That's what I thought. And it might have traded at 24 times earnings. And that would have taken the S&P to 7,200. Yes, when the market peaked on February 19th, about 1,000 points below 7,200, it seemed perhaps that we could get there. So therefore, we're sticking around for it. Why not? Wall Street was very bullish on Trump's administration's plan for deregulation, for lower taxes, and pro-growth policies. Well, it turns out we weren't paying enough attention to the actual words out of Trump's mouth. Now, this was a moment where the president decided to rearrange the entire world order, albeit in a very slapdash plan that I think could torpedo the economy. He decided we needed extremely high tariffs in order to stop our trading partners from ripping off America. I like that, but not this high. It was not thought through. And he blindsided our friends and our companies, and yes, most importantly, you and me, the shareholders. And we count on this market for our retirement hopes. We bank on the stock market. Could be foolish, but we bank on it.
As we conclude our journey through Nvidia's market roller coaster, it's evident that opportunities lie within the storm. The current valuation of Nvidia presents a compelling case for investors, with the AI narrative holding strong. But what do you think? Share your thoughts down below. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.